everyone, and welcome to today's show. So, for today's webinar, we'll be exploring how tokenization is fundamentally reshaping capital markets. And for this, I'm really pleased to be joined by John Kikko from the Hedera Foundation, Michael Heinrich from Zero G Labs, and Olivia Vande from Ava Labs. So we'll cover a number of topics, including the inflection point where tokenized securities and deposits are creating seamless capital flows. We'll look at what major financial institutions are doing and driving the integration of traditional finance with blockchain technology. We'll look at how tokenization is moving from experimental to real institutional adoption, and hopefully unlocking greater efficiency, liquidity, and interoperability in our global capital markets. Before we get started, of course, a little disclaimer. The information contained in this webinar is only for informational purposes and not intended as investment advice. So without further ado, let's get started. So let's open up the stage for panelists to introduce themselves and share a brief overview of your respective organizations, where and how you're positioned in the tokenized ecosystems. Who wants to get started?
I don't mind going first. Thanks, Sacha, for that introduction, and quick background on myself. So I'm John Kikko at the Hedera Foundation. I just joined 2 months ago, so fairly new to Web3. Prior to this, I was at Fidelity Digital Assets and Anchorage Digital before that. But before crypto, I've been in the sort of finance, the global investment banking space, in the sales and trading side of the segment, and so really excited to kind of go deep into this sort of Web3 space as we start to see the convergence of traditional finance and sort of the digital asset technology kind of converging. So I'm really excited to be here.
Happy to go next. Hey everyone, Michael, co-founder and CEO of Zero Gravity Labs. At Zero G, we're building the fastest and largest AI layer 1. And just a quick background on myself, I started on kind of the deep tech end at SAP Labs and Microsoft, and then moved over more to the business side, worked for Bain & Company and Bridgewater Associates. So I have a bit of a TradFi background as well. Then after that, went back to graduate school at Stanford, started my first unicorn company coming out of Y Combinator, and then started Zero Gravity Labs a couple of years ago. And for us, tokenization is not just around kind of existing financial assets, but also tokenizing new financial assets. And from our perspective, and love to chat more about this on the show, is we also see AI agents as financial assets in the future, because they can actually do useful work for you. And so we're looking at tokenizing that, for example, so that you can get exposure to AI agents and their economic kind of activities as well.
I'll go next. Hi, everyone. I'm thrilled to be here and really looking forward to this discussion. I'm Olivia Vande, and I'm on the on-chain finance team at Ava Labs, which supports the growth and adoption of the Avalanche blockchain network. And our on-chain finance team really unites the DeFi payments and institutions and capital markets teams, and reflecting how CeFi, DeFi, and TradFi are continuously colliding in real time. And as I'm sure everyone here has observed, these worlds are no longer operating in silos, but increasingly converging into a single interconnected system. And within that mandate, I focus on institutions and capital markets use cases. So really partnering with everyone from visionary founders to larger buy and sell side institutions that are building out products and services related to wholesale banking and capital markets. And before joining Ava Labs, I invested in small mid-cap bank stocks at T. Rowe Price Group, which really gave me a front row view to just how much of global finance is still running on legacy and sometimes COBOL-based infrastructure, and the scale of the opportunity to upgrade it.
Awesome. Yes, COBOL coders are not going away for now. But let's start with a quick landscape and looking at what's been going on with all the institutional momentum we've seen over the past half a year or so. So where are we today in the tokenization adoption cycle? What have you seen driving the shift to institutional implementation? What are the enablers?
I would say we're still very early in the tokenization phase. So I think Oliver Wyman came up with a number that something like 800 trillion of assets can be fully tokenized. And I think we're expected to be at about 6 trillion or so by 2030. So very, very early in that journey. And these assets can include, anything from real estate to financial products to derivatives. And so we're just at the very beginning of it. And what's particularly exciting to me is that we're starting to see regulatory clarity. So the Genius Act, of course, very much defined what a stablecoin is and what it's not. And so stablecoins have to be one-to-one backed, for example. And so that now creates a lot of regulatory clarity for kind of TradFi institutions to come into the space. And so to me, that's very exciting. So I think we're going to see a lot of growth on the tokenization as a result.
Yeah, I agree. If you look at kind of RWA XYZ numbers, it's like $25 billion of RWA assets on chain today. And so when you're looking at that target of trillions, we're still very, very early. And we're seeing, the most adoption kind of in the tokenized money market fund space, largely kind of servicing the on-chain economies and looking for those, diversification for treasuries. And so we need to start to kind of have a clear path to distribution of these assets. Currently, we have, wallet holders of tens, under 100 wallets that are holding these. So we clearly need to distribute this further. And so I think, as you mentioned, Michael, about the Genius Act and the Clarity Act will definitely be a massive catalyst to kind of have some of these sort of incumbent players stepping in and adopting this technology in the back end and effectively abstracting away this experience and really being able to offer these services with additional utility that tokenization allows. So really excited for the next couple of years.
Yeah, and to level set, so Avalanche's role in this rapidly evolving tokenization landscape has really been to be the place where capital connects. It's a high performance institutional grade foundation that powers the full life cycle of tokenized assets from issuance and trading to settlement and servicing. And is seen with Avalanche's customizable layer 1 blockchains that offer sub-second finality and inexpensive transaction costs and seamless interoperability. We've seen a great uptick in terms of institutions that are reaching out about L1s and exploring the speed, flexibility, and trust that they need via L1s. And I would say I often refer to the Gartner hype cycle. We've moved past this trough of disillusionment and into the slope of enlightenment, as the Gartner hype cycle cites. And it's really a phase defined by measurable ROI, clear regulatory guardrails, and mature tech and risk frameworks. And so I would say tokenization is already delivering hard dollar impact with trillions in monthly tokenized repo volumes. John alluded to this earlier, but approximately 26 billion in live RWA market cap, and active and increasing institutional deployments across treasuries with money market funds from VBIL and BIDL and Benji to private credit with Apollo's ACRED launching. And I would say that 4 fundamental forces are really driving this shift. We've had regulatory tailwinds with the US Genius Act, EU's MiCA framework, and the UK Digital Securities Sandbox. We've had maturing infrastructure that's meeting the institutional needs for security, privacy, and predictable settlement through permissioned L1s and audited smart contracts and compliance layers. We're already seeing proven ROI with live platforms like Intane that are cutting, issuer costs by 50 to 100 basis points. And then I'd say, fourth, the proliferation of stable coins and synthetic dollars. And that's now, among the largest or single, demand source for RWAs. And we're seeing issuers like Circle or MakerDAO that must hold high quality yield bearing collateral, such as, short-term treasuries, money market funds, and other high quality liquid assets to back every token that they issue. And with stablecoin market cap surpassing 272 billion, these reserve requirements create a structural continuous bid for RWAs that are increasingly deployed on chain to really boost capital efficiency and transparency. And to sum it up, I'd say tokenization has left the lab. We're past the proof of concept theater and really moving into a measurable ROI phase with trillions in monthly repo, billions in live RWAs, and real institutional capital that's already flowing. And we're really at this DTCC Euroclear moment for digital assets where the core market plumbing is being standardized and the institutions are wiring, that are wiring today's shared ledgers will define the netting rules, control points, and service layers that the rest of the market will follow.
Mm-hmm. Yeah, and double clicking on that, right? You guys mentioned the BCG tokenization estimate of 18.9 trillion by 2033. I think we can round it up to 20. Uh, so what does tokenization solve for traditional TradFi firms compared to legacy approaches?
Yeah, as Olivia mentioned, I think the one that really stands out is the collateral mobility. So the repo transactions that can be done in minutes rather than days. That unlocks a lot of capital efficiencies and frankly allows for capital velocity globally. And really, I think we're seeing kind of the first stages of tokenization where you tokenize high quality, very basic assets like stable coins and money market funds and T-bills. And that becomes the collateral layer for more interesting, more riskier products on top of that. And so I think that's the real big unlock. And especially as folks are looking to provide these products to markets that they haven't traditionally been involved in, this allows for tapping into new markets as well.
Yeah, maybe to add to that, there's kind of a democratization layer that happens. So before, maybe as a regular retail user, you were not able to be exposed to a market neutral hedge fund, for example. But now you can go onto Midas and have access to tokenized T-bills. You can have access to MEV, RE7, Edge Capital, those types of kind of really interesting market neutral hedge funds. There's also kind of basis trades that are being tokenized as well. And they're in many cases fully liquid, so you can get in and out from one day to the next. And things like that weren't possible before. And so it's a super exciting kind of enabler of new possibilities.
Yeah, to add to that, I would really think of tokenization as like upgrading from a paper map to GPS. So traditional capital markets are historically slow, static, and gated, kind of like navigating with a printed map. But tokenization makes markets dynamic, real-time, and borderless, opening up entirely new ways to create value. And programmatic capital really takes this a step further by automating how capital moves, unlocking significant operational efficiencies in what are historically cumbersome markets such as asset-backed finance. And really by streamlining execution and reducing the administrative frictions, it enables smaller investors, including family offices and emerging managers, to participate competitively alongside larger institutions. And as Michael said, it's democratization of finance, but viewed through an institutional lens. And I would point to startups like OpenTrade, for example, that are really illustrating this shift. They're turning stable coins like USDC, USDT, and EURC into yield-bearing assets backed by real-world instruments such as money market funds and high-yield products. And they're really enabling embedded yield products for fintechs, neobanks, and exchanges that are serving millions of users across Latin America and Europe. And what they're doing is addressing what I view as the three major problems that legacy markets struggle with, including access to institutional grade yield. Traditional markets restrict high quality yield products to accredited investors with really large minimums. OpenTrade can help fractionalize these assets so anyone can participate, giving end users of Spanish fintech Cryptan or crypto exchange Woude or Argentine fintech Bellows, ability to have the same earning power as large institutions. I'd say the second issue they're tackling is real-time settlement and capital efficiency. So in the old system, investing in treasuries takes days of wiring, clearing, and waiting, really leaving cash idle. Their tokenized vaults are settling T+0 and stables and allowing fintechs like Colombian neobank Lidio to really sweep idle balances into yield instantly and redeem daily without touching fiat rails. And the third I'd focus on is challenge that they're focused on is borderless distribution with built-in compliance. And all this happens through tokenized rails and with the speed, liquidity, and transparency that allow the Wenbits, Lidios, Cryptans, Bellows of the world to reach end users who don't necessarily know or care that Web3 is on the back end, but do value access to USD savings accounts or the US dollar in general.
Yeah, to add to some of the examples as well, some use cases. So Aberdeen Asset Management is a governing council member of Hedera Foundation, and and what they've done recently is use tokenized money market funds as collateral to do an FX leveraged FX trade with Lloyd's banking group. And so, if you can see the FX market being $1 trillion sort of volume market, this can really unlock capital efficiencies from when accessing leveraged FX trades. And so this is starting to kind of this has gone beyond proof of concept and is in production, and we're starting to see the early signs of this kind of taking off. Other examples are payment versus invoices. So there's currently a $2.5 trillion financing gap between Taiwan and the US for Apple supply chains, and currently there's months and months of sort of time for once the invoice is sent out and the product's delivered, there's a massive gap in terms of financing there. And so using blockchain technology to be able to solve and provide immediate payment to suppliers is another sort of real interesting use case for tokenization.
Mm-hmm. Yeah. So increasing access, having lots of other applications, and having better infrastructure that's enabled by better infrastructure. And the big names are coming in, right? We've seen all the likes of, and John, you've seen this at Fidelity, BlackRock, KKR, Apollo, like all the big names are coming in and actively tokenizing assets. Why now? How is that possible? What fundamentally changed in the past 12, 18 months that really accelerated that adoption? Were there any barriers that existed 2 years ago that were eliminated? And which ones are still need to be addressed?
I kind of spoke a little bit about it. Regulatory clarity, I think, is a really big one. Also, the shift in administration, where kind of blockchains were, let's say, just demonized and now accepted, definitely helps a lot. Kind of that being able to point to that shift, and in general, kind of more of an institutional readiness as well, understanding the technology, understanding what it does. And then finally, I would say shaking out of bad actors. So of course we had the whole FTX fiasco and others. And as those bad actors are shaken out, then kind of better actors can come in and actually really utilize the superpower of the technology that's available.
Yeah, and I mentioned this earlier, but as sort of interest rates in the US and globally have kind of ticked up over the last 2 years, we've seen kind of demand from the on-chain economy to access these high quality yields. And so, that really serviced a real demand there from the asset managers tokenizing these things. So that was definitely a massive catalyst. And as Michael mentioned, as we look forward with regulatory clarity in Europe and other parts of the world and the US as well, that's only going to continue to accelerate that sort of movement on chain.
Yeah, I'd add certainly that the policy changes, such as the Genius Act, every incremental executive order on 401ks, or the OCC's interpretive letter 1183, accounting updates like FASB's ASU 2023-08, all of those invite further institutional participation. And the more proof points we have, such as BlackRock's BUIDL surpassing 2.2 billion in AUM and its acceptance as margin collateral on major exchanges, alongside more matured custody, transfer agent, and compliance infrastructures, the more we'll see institutions lining up to become involved in this space. And I'd really say we're at the moment, we're akin to derivatives, reaching central clearing, when the market moved from fragmented bilateral trades to a shared standardized infrastructure with clearinghouses standing in the middle. The plumbing was built, the risk frameworks were codified, and regulatory mandates gave institutions the confidence to transact at scale. And I see the same convergence occurring now with tokenization. The rails are live, compliance and custody are institutional grade, and the legal rule book is increasingly being put in place, all of which will enable scale without sacrificing safety for tokenization.
And yeah, John, did you want to add something?
Yeah, and I think what's maybe your question is like, where are we going from here? And we're seeing some of the sort of crypto native folks doing tokenized stocks in the US, servicing European customers, for example. And when you start to do that, you were starting to see, friendly competition amongst the crypto natives and the incumbents. And so I think that would help probably accelerate the speed in which traditional finance will need to catch up to the more nimble crypto native entities.
Mm-hmm. Yep. And let's start with, and let's go into each of your guys's ecosystems and get some concrete examples and of the developments that have been going on. So John, let's start with Hedera. Can you tell us a bit more about, you have the more than 200 million in live stablecoins, including Fidelity's USD money market fund token. You have you've been seeing a lot of institutional adoption and confidence. What has been driving this? Can you share a bit more about those?
Yeah, I mean, we've been working with large asset managers globally for some time now. And you mentioned one of them, and we continue to build sort of ways to work together on having these assets on our ecosystem so that our participants can purchase these things, and we continue to explore ways we can unlock utility and interesting use cases around that. So being able to use this as collateral in DeFi, or and find sort of institutional buyers and sellers globally. I think where we're excited about is, I think all these real global brands and, a lot of trust coming into this ecosystem. But at the same time, we're working with real world sort of applications of tokenized assets as well. And so, for example, we're working with the Central Bank of Australia to, kind of pilot their central bank digital currency or stablecoin initiatives and really updating their financial rails. We're working with various corridors around remittances around the world to, obviously you embed stablecoins and allow for real-time, transfer of value. We continue to work with our governing council members. So, if you look at our sort of 32 governing council members that are actively and operating our network today, there's a lot of financial institutions globally, such as Aberdeen, as I mentioned earlier, the Australian Payments Plus, Standard Bank, which is the largest bank in Africa, Shinhan Bank, a Korean bank, Nomura Holdings, which is the largest broker-dealer in Japan. And so these folks have been operating the network for many years. And now, because of the regulatory clarity, they're starting to engage and starting to be active on chain. And so we'll start to see more and more deployment of really high quality assets, for example, asset managed products, or sort of tokenized invoices, warehousing for supply chains. And so various use cases across not only just financial markets, but across supply chain and AI and other areas.
Awesome. And then Olivia, on Avalanche, through Evercloud, you've enabled 80 live enterprise blockchains, including DeFi's dedicated L1, which is quite interesting and exciting. For what type of use cases, mostly institutional, are you seeing the strongest demand, right? And how do you see these impact the broader capital markets in the future?
Yeah, so to start with, Avalanche, supports both the public permissionless C chain and fully customizable L1s, and we really let the use case dictate the optimal infrastructure. We meet partners where they are rather than pushing one model over the other. So to answer your question, we've had several institutional use cases within both the C chain as well as individual L1s. Today, Denari was announced, enabling tokenized US equities via an Avalanche L1. Intane is one that I mentioned earlier that's focused on structured finance, and there are several really exciting other L1s. But I'd say across both the C chain and L1 applications, we're seeing strong demand in two institutional verticals right now, among others, but I'll focus on payments and private credit. both of which have direct measurable impacts on broader capital markets. So in payments, cross-border settlement and liquidity optimization are leading the way. One of our partners, Axiom, AXIYM, is a great example. They're embedded into licensed MSBs and payments providers that collectively move over 25 billion annually. And under the traditional model, those providers pre-fund accounts in multiple jurisdictions, which inevitably ties up capital, creates FX exposures, and suppresses ROE. But by using Avalanche's low latency stablecoin rails, Axiom is enabling real-time liquidity and T+0 settlement. And that eliminates the capital drag, improves working capital turnover, and enables payment providers to expand into new corridors without holding idle balances. And the capital markets impact is meaningful. It's faster cash mobility, reduces settlement risk, increases capital velocity, and frees up liquidity for redeployment into higher yielding assets, and essentially building a continuous global payments backbone that can plug directly into tokenized assets markets. And the analogy I think of is it's like replacing an international network of toll booths with an open express lane where capital moves continuously instead of stopping continuously to pay fees and wait at every border. And the second use case I'd point to is that of private credit. So in private credit, tokenization is solving structural inefficiencies in a north of $1.7 trillion market that's really capital intensive, operationally fragmented, and historically illiquid. And one recent example on Avalanche is Grove Finance is deploying $250 million into institutional on-chain credit through Centrifuge, with allocations to Janus Henderson's JAAA CLO and Treasury funds. And here, tokenization is enabling T+0 settlement, programmable capital calls and distributions, loan level performance reporting, and more that together improve portfolio management and risk oversight. And so inevitably for capital markets, this would deliver liquidity transformation, capital efficiency, market expansion, risk-adjusted transparency, and more. And again, I think of the analogy as it's turning private credit from a series of one-off charter flights into a scheduled airline with more regular, predictable, and accessible flows to a much broader set of passengers. And we're really excited to continue building out that vertical.
I love the analogies.
Thank you. I appreciate that.
And the avalanche triangle almost looks like a delta.
I could go on with more analogies.
Avalanche airplane coming soon.
Yeah. So Michael, let's talk about Zero Gravity Labs. You guys raised a really impressive $40 million seed round, and you've been mentioning 50,000x performance gains. What growth metrics are you seeing in developer adoption, and what are you tracking? How does it translate to applications that you're seeing being developed for capital markets?
Yeah, together with the Zero G Foundation, kind of in total, we've raised about 350 million to date. And that kind of funding is necessary in order to build for an extreme use case. So if we want to have AI on chain, basically we had to rethink the entire infrastructure. First of all, at the execution layer, we had to think about parallelizing the execution layer so that, in effect, we don't have to worry about transactions per seconds anymore. Many measure like, oh, I can do 10,000 TPS, I can do 50,000, 100,000 TPS. Well, when you parallelize and have a sharded approach, you can do infinite TPS. So it doesn't matter anymore. So for AI, that's absolutely necessary. And then you also need to figure out a data throughput. In modern data centers, you have something like hundreds of gigabytes, even terabytes per second of throughput. When we started, Ethereum was doing about 80 kilobytes per second. And so there's like a million times gap effectively between what's necessary for AI and these extreme applications and what's actually possible on blockchains. So we redesigned kind of what's called the data availability layer from the ground up so that each one of the data availability layers with a consensus layer can do about 50 gigabytes per second in throughput. And again, if you parallelize them, then you get through infinite throughput. Now, what does this enable is kind of the key question from a financialization aspect. It basically enables completely kind of transparent AI applications to do things that human beings were able to do before. So it's an automation kind of approach with full transparency, full provenance, for understanding what's going under the hood. So it's not a black box system, it's kind of a transparent system. So if you wanted to do a complex, let's say, settlement process for a debt-based hedge fund that kind of bought a distressed asset, sometimes these can take 30 days, but then you add, let's say, an ultra performant chain like ours, plus, let's say, an AI agent that is very familiar with all of these settlement steps, and you can maybe take that 30 days to hours. And so that's really the power of what AI enables in these types of cases. So automation, speed, kind of throughput, and big cost savings as part of that. Because if you have a settlement process that goes from 30 days to a few hours, that's obviously huge cost savings on kind of the people and financialization aspect.
And just to add to kind of the AI side of the involvement for Hedera, we've been working with the likes of NVIDIA and Intel through our portfolio company Equity Lab to embed some of this software into these chips that these GPU manufacturers are producing to effectively provide cryptographic certification of AI computation from all the way from training to inference. And so these verifications are immediately recorded on the Hedera network, and these, as we see more and more proliferation of AI models and agents, we need some way to have some level of verification and sort of provenance, as you mentioned. And so, yeah, we're very excited about that use case as well.
Yeah, what John's talking about is generally known as TEML. So it's a trusted execution environment. And that's, at the moment, the most practical kind of verification mechanism. There's quite a few approaches to it, but we're actually working on a new verification mechanism as well, where you're not only just using high-end graphic cards that have these TEs embedded, but you can actually extend it to consumer-based devices as well. So why is that important? For example, we released a research paper about a couple months ago where we were the first to train a 107 billion parameter model in a fully decentralized setting, which was 3x the previous record. And that's significant because if you want to access people's kind of private data, for example, or you want to democratize AI access so that people can contribute to inference or fine-tuning or even pre-training these large-scale models, we need to open the aperture to go beyond just kind of data center grade hardware and enable consumer grade hardware so that we can have access to bigger sets of data and more individual expertise as well, and kind of building some of these models for, let's say, financial use cases or even computing type of use cases.
Very, very interesting. No, and also I assume with an aspect of users being more in control of that of the data. Super interesting. So let's go with John again on some of the recent development or partnership that were announced. John, can you tell us a bit more about Hedera's partnerships with Tokeny?
Yeah, absolutely. So as you know, Tokeny has been acquired by Apex. Tokeny is provides compliant tokenization, and they're a big part of the ERC 3643 standard. And so we are a member of the 3643 Association, as we want to see more compliant tokenization and standardization of these things. And so we're obviously working very closely with them to continue to have compliant KYC check, proper transfer limits embedded, ways to continue to grow the pie together. So that's our involvement with Tokeny as it stands today.
Awesome. And Olivia, on the launch of Avalanche Vista, right? The $50 million initiative, really targeting to pioneer the future of asset tokenization. And you've had great partnerships with major asset managers like BlackRock, and obviously with a lot of institutional momentum. How are these partnerships evolving? What does it consist of? What's your take on this?
Yeah, so since day one, our priority has been to cultivate a high quality pipeline of tokenized assets. And that's been a mandate that we've executed on by onboarding the likes of marquee managers such as Vande, BlackRock, Apollo, KKR, WisdomTree, et cetera, and with continued expansion into additional asset classes. I'd say with this supply side foundation in place, we've also been maniacally focused on the demand side and executing go-to-market strategies across both the crypto native or DeFi ecosystems and traditional financial channels. And so this includes originating distribution relationships with neobanks or fintech platforms and enterprise-grade intermediaries to integrate our tech enablement partners' products into scalable revenue-generating flows. I'd say one of the most visible instances of institutional demand today has been in institutional DeFi. And one example is with Apollo's ACRED launch in partnership with Securitize, really serving as a bellwether transaction. So in January, the roughly 800 billion asset manager expanded its digital distribution strategy. They're offering qualified crypto native investors blockchain-based access to one of their flagship private credit strategies. And so ACRED effectively operates as a tokenized feeder fund, replicating Apollo's diversified credit fund. And its innovation lies really in the on-chain composability aspect. So investors can mint ACRED against their positions and pledge it as collateral within DeFi protocols to borrow stables. And that really unlocks secondary liquidity without triggering a redemption event. And in my view, this represents a structural evolution that combines private credit yields with DeFi native leverage, hedging instruments, and liquidity provisioning, a functionality that in my view is really exciting and that conventional market infrastructure cannot replicate easily. And from a capital markets perspective, the implications are pretty material. Capital efficiency is achieved when investors can simultaneously capture yield on core portfolio holdings while also liberating liquidity for redeployment into incremental opportunities. There's a structural convergence that's accelerating where institutional grade products are achieving full interoperability within programmable DeFi environments. That's really exciting. That obviously can unlock things like real-time financing, continuous secondary market formation, and also dynamic cross-asset allocation strategies across both the public and private markets. And third, I'd also point to the expansion that's catalyzed by this blockchain-based distribution rail that's establishing these direct origination channels into qualified crypto native liquidity pools, and again, really unlocking capital sources and investor segments that have historically been inaccessible to traditional asset managers.
Yep. And Michael, your mainnet launch is expected hopefully Q3 2025. How important is the timing of bringing this decentralized AI infrastructure to market as institutions embrace more tokenization?
Yeah, it's absolutely essential to get the timing right. AI is obviously a hot topic, and then being able to integrate it into institutional workflows is so timing is absolutely ripe for that. So end of the quarter, we'll be releasing our mainnet. We're, as I kind of mentioned, the largest ecosystem for AI-based applications on any layer one. We have more than 300 projects building on top of us. And those types of use cases are anywhere from kind of, like I mentioned, Midas has tokenized market neutral hedge funds and T-bills to providing tokenized equities that can be kind of perp traded and leveraged, to building an AI trading agent together with Plume, for example, to having AI agents that are doing portfolio management for kind of regular retail users. So it's going to be very interesting from a kind of financialization aspect, but also from very much, what's possible to be pushed from an AI agent and kind of automation perspective as well. So really excited about seeing a lot of the applications that are going to be coming to chain.
Yeah, and what's great, what I love about this panel is seeing the diversity of the projects, right? We have Hedera on the one hand is really focused on enterprise government councils. We have Zero Gravity with the AI blockchain convergence, Avalanche on bespoke institutional infrastructure. You said, you let the demand drive the shape of the infrastructure. So how do you position yourself for growth in such a increasingly competitive landscape, or maybe not that competitive. I'd love to hear your take on this. But what's your competitive positioning and ecosystem growth strategy?
I could go first. I mean, we could talk about scalability and infinite throughput, and Hedera has the ability to do so. But more exciting than just simply the tech is our relationship with global stakeholders across Fortune 500 companies, government agencies, and universities around the world. And we're continuing to work with them to solve real problems. And it's not just simply financial markets and creating financial tools for them, but also really trying to solve for bottlenecks around some of the everyday problems that they're dealing with. So we're excited about continuing to grow that relationship and continue to add governing council members to our validator set. And what really kind of drives, I think, the sort of adoption cycle going forward is having the tech that is easy to use. And so we have the ability for folks to pay gas fees effectively denominated in dollars they're fixed. So there's no front running of blocks. There's no spikes when there's a spike in activity somewhere else. And so we make it very easy for folks to build and be able to budget for the amount of sort of use of the technology. And so we kind of position ourselves really kind of focused on servicing the enterprise space, whilst really kind of doubling down on growing our DeFi footprint as well. We just had a change in our leadership starting this year, and we're really focused on DeFi, DePIN, and AI, as well as asset tokenization, because we believe we still need to have a vibrant sort of retail ecosystem with really exciting products in that space, coupled with the sort of enterprise use cases that we've been focused on.
Happy to jump in here as well. I'd say from an Avalanche perspective, we're positioning Avalanche for growth by pairing unmatched performance with the flexibility and trust that institutions need and demand. So Avalanche is underpinned by a consensus mechanism. It's lightning fast, offers sub-second finality, and is also very low cost. And that is really built to power mission critical tokenization at a truly global scale. And like I said earlier, we meet partners exactly where they are, whether that means launching on our public permissionless C chain or spinning up their own fully sovereign layer ones that could be public, private, or a hybrid, and each with deep compliance, governance, and interoperability baked in. I'd also add that one of our most powerful growth engines is AvaCloud's EERC privacy standard, which erases the old trade-off between privacy and compliance with respect to launching on public permissionless chains. And it enables confidential ERC20 transfers without touching the base protocol. And while an auditability module gives regulators controlled visibility. And that means institutions can launch tokenized funds, private credit products, do interbank payment rails, what have you, on shared infrastructure, but without exposing sensitive data. And that accelerates onboarding, reduces operational risk, and really sharpens the institution's competitive edge. And I'd end by saying we're not just shipping infrastructure, we're also co-building the future of financial services. So we partner with asset managers, custodians, and fintechs, et cetera, to bring products to life, to plug them into liquidity, open doors to deal flow through our Blizzard VC fund, and also drive adoption from pilot to full-scale rollout with support from our technical team and also tech enablement partners. And obviously, it's an increasingly crowded market, but our edge is really in the fusion of speed, sovereignty, interoperability, and an institutional grade growth model given our partners. And that makes, really, in my view, Avalanche the place where capital will really connect ultimately and accelerate.
Yeah, for us, it's very simple. We are the AI blockchain. We're basically making AI safe, transparent, and a public good.
Super clear. Couldn't be clearer. That's and very, very exciting. So let's do a quick round of, okay, what's the future of tokenized capital markets? any sneak peeks into what's to come, what things you're building, any partnerships that are coming up, events? Who wants to get started on this?
I could go first. So we're excited about the our HBAR ETF that is hopefully going to be listed soon and traded very soon through Grayscale and Canary. We'll be participating in the CBOS event, which is an event hosted by Swift in Frankfurt. It's an enterprise payments conference, so we'll be part of that. But yeah, there's plenty of conferences coming up, so we're excited about all these events in the next couple of months.
For us, the biggest kind of event that's upcoming is Mainnet, as you mentioned, end of the quarter. And we're kind of the major conference sponsor for the Korean Blockchain Week. So you can definitely catch us there and see quite a few of our ecosystem projects demoing some of the applications and use cases that they've built, whether it's portfolio trading agents to liquidity, like cross-chain liquidity kind of providers, to kind of a new type of perp DEX that's using AI for rebalancing. So it's going to be super fun. So come visit us in Korea if you happen to be there.
Yeah, and I'll add that we're really excited about some industry events and developer forums that are upcoming. Stay tuned for some more announcements on our events, including Wyoming Blockchain Symposium, as well as the Stablecoin Conference in Mexico City at the end of this month. But looking ahead, we're really excited about continuing to accelerate real-world institutional deployments by expanding partnerships and deepening integrations. And we're building really advanced infrastructure that empowers institutions to launch sovereign L1s or on our Avalanche C chain with the granular privacy, compliance, as well as governance controls that they need and demand.
Awesome. Well, as we're coming up on time, it goes always too quickly. But I'll ask you guys to give us maybe a bold prediction for the future for the next year or two, and then where people can find you.
So I believe that in the next 2 to 3 years, we'll see a lot of this abstracted away. I think the regulatory clarity that we'll hopefully see with the Clarity Act in the US over the next 2 months and all the other jurisdictions really kind of following this US lead in terms of bringing a lot of these assets on chain. I think we're going to start to see that experience from a consumer perspective, from an investor perspective, just seeing kind of cheaper access, more utility, and without having to know where their wallet is and what layer one it's on. And so I think within the 2-3 years we'll see an acceleration of that, and I think we're going to start to see a friendly competition between crypto native exchanges and the sort of traditional finance folks that are servicing the equity markets, the FX markets, asset managed products. And so with crypto exchanges around the world giving their global reach to retail and institutions, they're really going to put some pressure on traditional finance to catch up. So it's going to be exciting to see that.
I'll go next, I suppose. I'm in light of the news today about Denari, FINRA registered broker-dealer that's specializing in tokenized U.S. equities, and their launch of the Denari network, a purpose-built blockchain on Avalanche. I'm very excited about the future of compliant and regulatory forward tokenized U.S. equities. And so this is my own view, of course, but I'll hazard a guess that by 2027, 2028, we'll see perhaps 15% of all U.S. equity trades by notional value settling on tokenized rails.
That would be exciting.
Yeah, I love the boldness of the prediction.
From our perspective, AI will start to move on chain, especially at the intersection of finance and AI. And so very much would love to see kind of a global neobank being developed, as well as major institutions starting to trade on DEXs. And so I'm pretty confident that'll start to happen in the next, let's call it 12 to 18 months. And then most of my thoughts, you can follow me on X. So it's just Michael H_0G. So Michael H_0G. 0 is a numeral. So I would be excited to interact with you all.
Awesome. Well, yeah, John, do you want?
Handles at John Kikko on X. And you can find me on LinkedIn as well.
Perfect. And for Olivia, you can see it in next to
yes.
Labs
Please do reach out on LinkedIn and/or X. My handle is crypto Reine. It's French for queen, but it's crypto CRYPTO REINE. Look forward to continuing the discussion.
Wonderful. Well, that's very exciting. Thank you so much for sharing all those thoughts today, and very exciting developments that you guys have been working on really hard on. Thank you to everyone for joining today, and we'll see you next time. Have a good one.
Great. Thanks for having us.
Thank you so
Thanks,
much.
everyone.